What's up, guys? Americana back here with another video. Over the last few weeks, I've showed you guys some different PDF breakdowns, kind of visualizing the same data that we've been talking about, but actually putting some numbers to it, putting some returns to it, showing some different scenarios, some different outcomes to tell you guys what you could expect actually applying a system to your portfolio using an indicator like we have been talking about. So today we're going to dive into some more of these PDFs. I want to talk about some simulated returns from Bitcoin and Ethereum based upon where it's at, and kind of show you guys how where we're at now within the market is actually like the worst percentile of this. It doesn't mean it's going to be like that always. We still are within this kind of area of expectancy, if you will. It's going to nerd out in this video for a little bit, but hopefully you guys enjoy and it helps you think about where the market is going to go next. So let's go ahead and dive in. All right, guys. So just to refresh your memory, this was kind of what we looked at last week. It's visualized all of these different dip buying opportunities on Bitcoin using this indicator, right? The different portfolios and different returns using 1 day, 3 day, 5 day, weekly oversold, and then comparing that to what a DCA from that cycle would have been. I don't know if we broke it down last week or the week before, but we also talked about kind of some open positions that would have been building within this system, what the returns would be on like a move back to 87K. But this is kind of the main thing that I want to talk about, all these different little points where things are getting bought and sold, and kind of what those returns have been. Now, this new visual for this week is kind of the same kind of idea, but we're not really applying money that we put into it from our portfolio. We're just showing this kind of forward-looking path where we could expect expected returns to fall within. So these are percentiles, highest percentile, kind of median, 50th percentile, the 25 and 75 bands on top, and then bottom percentile right there. I think it's bottom 10th percentile. I don't want you to focus on this forward-looking path because this is talking about like an entire 4-year cycle. I couldn't separate the math from itself when I was defining this path. So this is all the way out to like the end of a 4-year cycle, which we know that is not going to be true. But this path does still, it is like time stamped over time. So it still does work. And then we can use, this is the data that I wanted to see, 3-month, 6-month, 12-month forward-looking returns. Again, I don't remember exactly where we're at right now. I think it's like down 10, 15, 18, 20% right now. We are within this 6-month time frame. So you can see, right, even visually on here, that we definitely are within this bottom 10% quartile right here. And really quickly, I want to jump to something else because you guys might think this is just bullshit or whatever, and I might not be explaining it well. But we'll show you some, or I'll show you some examples of this actually playing out, right? So this is NVIDIA's 3-day or daily discount. I forget what I actually used. Right, it's that same kind of band casted outwards, and it actually outperformed even the best performing simulated returns at that time. We have Apple in here kind of staying a little bit more grounded. You can see it kind of riding that top band, getting back to the median, all these things. You guys see how this does do a decent job of forecasting. This is the S&P 500, and this is up to 12-month returns. So I just want to be clear right there. We did up to 35-month returns, but that's not what I'm interested in, how we're actually playing the cycle. It's just how I chose to show it so we could get a little bit larger of an image. Anyways, I'm digressing, but S&P 500, so this is like 2022 to 2023. Again, kind of riding within that mid-range to median. Microsoft as well, getting to that upper bound, and then ranging back down to the median. I'm not saying we can use this to actually predict price or buy and sell or something like that, but I do want to show you guys that these projected paths do have some validity to them, and it actually is a little bit of an oddity that we are trading in the bottom 10th percentile of what these projected paths would be. Now, looking at like where would we be by end of 2027, median path pointing to $2,500, more than that, sorry, 3,500, somewhere in there, 3,000 to 3,500 by end of 2027. Upper quartile or percentile would be new all-time high, and then even getting as high as 10, 12,000 on this upper band right here. Bitcoin median, we'll just go by end of 2027. Median back to new all-time highs by end of 2027. Extreme scenario, this would be like 250K by end of 2027, something around there. And then even the worst of scenarios by the end of 2027, price still above where it is at currently. This is that 12-month, 6-month, 18-month returns. You can kind of ignore the top 90th percentile stuff just because, especially on like the 24-month time frame, because obviously Bitcoin was a lot earlier at one point. But I think the median to even lower median is still respectable. But again, up and to the right from this point is what would be projected, and we've shown that multiple different ways. Right, we've even shown that on this chart. Again, up and to the right is what would be expected after getting something like this to show up. So we'll go ahead and keep this video light, right, and tight and wrap it up here. Hopefully you guys did enjoy. Hopefully you guys have been tuning into the videos. Hopefully you guys are in the Discord, and hopefully you guys are subscribed to the Substack. But we'll go ahead and wrap it up here. Enjoyed it as always. Let me know if you guys have questions in the comments, and we will catch you guys in the next video. Peace out.